Yes, welcome. Good morning. Now, now we just need to start CARO 2020. So previously we used to have CARO 2016, where we used to have 16 clauses that we need to report in fact. However, after introduction of CARO 2020, okay, there are some beautiful changes which are been incorporated. Okay, and there are 21 clauses in which you are now required to go and report. Okay, when we were discussing Companies Act 2013, which is there in your syllabus, company audit. Okay, I told you there is one section called as section number 143, subsection number 11. It talks about annexure related. Okay, annexure called as companies. Okay, see, companies auditors report order 2020. Previously it used to be 2016, now it is 2020. There are some significant changes in CARO 2020 where we need to highlight that along with notes. So in this current session, okay, along with our discussion, I am going to give you some beautiful notes also, so that before going examination you just need to read that notes itself. Okay, rather than focusing on the material which is given to you, either it can be my material or institute material. Both will be same in fact. Okay, I just copied the content from CARO 2020, which is given in the institute, and it is same as the government notification also. Okay, the same is now taken. There are 4 paragraphs which are there in this CARO 2020. Previously also it used to be 4 paragraphs only. There are nothing much changes in that, but I'll be highlighting the exact changes where it is happening. Okay, happened in fact. Okay, done. So let us have some beautiful discussion on CARO 2020. Okay, done. Let me highlight few things. It is CARO 2020. CARO 2020. It is called as companies. It is Companies Auditors Report Order 2020. Okay. Now there are 4 paragraphs. In fact, this is paragraph number 1, which talks about applicability of the order. Let us now talk about applicability of the order. The CARO 2020 is an additional reporting requirement. We know that in section number 144, subsection number 11, it specifies what? It specifies some annexure to be reported additionally by the auditor. It is an annexure to the original auditor's report. It doesn't form part of original auditor's report, but it acts as an annexure to original audit report, which we prepare as per section number 143. So main audit report will be there. Along with that, annexure shall also be there. That annexure contains CARO. Okay, so that is the additional reporting requirement that needs to be reported by the auditor. Okay, now it applies to every company. Including foreign company. It applies to every company including foreign company. So now when we talk about applicability, it applies to every company, okay, including foreign company also. However, there are some companies which are specifically exempted by this order itself. For those companies, this CARO 2020 is not applicable. So in general sense, it is applicable for all the companies including foreign company. However, this order specifically exempted few companies. For those companies, this order is not applicable. For them, CARO 2020 is not applicable. There is no additional requirement for them as per CARO 2020. If they are regulated by any other authorities or laws, then they need to follow, okay, as per that law, but not as per Companies Act. So CARO 2020. So now this is the first point, general point. It is applicable for all companies including foreign company. Let us now have some discussion on exempted companies for which CARO 2020 is not applicable. Okay, done. Let me go to next page. Okay, see, these are the following companies which are exempted. By this order specifically. Okay, point number 1, it is banking company. I am just highlighting few things. Banking company, because the banking company is regulated by Banking Regulation Act. Okay, whatever it is said in Banking Regulation Act, that needs to be followed. CARO 2020, it is not applicable. So additional requirements, if it is set by Banking Regulation Act, then they need to follow that, not this CARO 2020. So banking company, for banking company, is the CARO applicable? No, it is not applicable. For insurance company, there is separate act called as Insurance Act 1938. Hence CARO 2020 is not applicable for insurance company also. This is point number 2. Okay, there, as this is the first time, okay, first time in the examination it is going to come, right? So for that reason there may be a small question only. There may not be high level of question which may be asked in the examination. I guess from applicability there will be a question. Okay, from applicability there will be at least two marks question, and along with that there may be a case where I'll highlight few clauses from 21 clauses. Okay, there are 21 clauses that are to be reported. In 21 clauses, I'll highlight around 6 or 7 clauses. From that only in the examination it will come. So to maximum extent, I believe, okay, whatever I highlight, that will come in the examination. If not, I cannot do anything. Don't ask me. Okay, after if it is not coming in the examination, if it doesn't come in the examination, in fact. Okay, done. So it is not applicable for banking company, insurance company, and we know section 8 company. This lecture is particularly applicable for CA final and even CA inter also. Okay, for CA inter also the same lecture will be applicable. Okay, section 8 company we know, not for profit organization, so it is company with charitable objects. For them also CARO 2020 is not applicable. So these are the 3 points. And coming to next point, one person company, we all know in 2013 Companies Act, okay, the new concept has been introduced. When I used to study in 1956, there was no concept of one person company. Minimum for a private company there must be 2 persons shall be there. Okay, there must be 2 persons. Okay, however in this concept called as one person company, okay, there can be only one person, okay, who can start the business in a corporate style. Okay, for them also what is not applicable? So for OPC, CARO 2020 is not applicable. So along with OPC there is one concept called as small company. Okay, small company is also defined. Okay, small company, it is also defined under clause 87 of section number 2, okay, of section number 2 of Companies Act 2013. So okay, that is called as small companies. Now there is an amendment for small companies, in fact. So previously, from this attempt only it is applicable. Okay, now your work is to open the small company definition. I know it, but I am not writing here. Okay, I just want you to open your book, your material, so that you can just, okay, know and remember the new, okay, limits which are applicable for small company. To call a company as a small company, there are some certain threshold limits. That limit is now got changed. Now it is your work to, okay, to learn the new limits, okay, which is given as homework for you. Okay, done. So previously it used to be different, now it is different. Now it is the first time we are writing the small company definition, which is revised. Okay, done. Next point. So OPC, for OPC and next point, this small company CARO 2020 is not applicable. Now this is the area where institute may check you. Okay, there may be a question from this area. It is saying for a private company also, okay, CARO 2020 is not applicable if the following conditions are satisfied. If all the following conditions are satisfied, then for a private company also there is no applicability of CARO 2020. Okay, done. So point number 1, there are in fact 4 conditions. Okay, 4 conditions. Let me write that 4 conditions also. Okay, I will just write here, you just need to copy in your notebook. Okay, so please maintain the book properly, so notes properly. Before examination it is going to be, okay, very, very helpful for you. Done. So this CARO 2020 is not applicable for a private limited company. Okay, private company, for a private company it is not applicable. However, following conditions must be satisfied. Condition number 1, see the condition: it shall not be a subsidiary or a holding company of a public company. See, it shall not be a subsidiary or holding company of a public company. So it shall not be a subsidiary or holding company of, okay, public company. So if a private company which is a subsidiary or holding company of a public company, then CARO is applicable. So first condition, it shall not be. First condition, it shall not be. So first condition must be satisfied. Okay, and then another condition is also there. See, having paid up capital and reserves and surplus not more than rupees 1 crore. Okay, see, PUC plus PUC plus PUC plus reserves and surplus okay, PUC plus reserves and surplus shall not be more than rupees 1 crore, shall not be more than rupees 1 crore, that is less than or equal to 1 crore, less than or equal to 1 crore as on the balance sheet date, as on the balance sheet date. So here reserves and surplus means it can be any reserves and surplus. Okay, there are different types of reserves, right? Okay, reserves which are restrictive in nature for its utilization, or reserves which are free in nature. Every reserve shall be added here. So paid up capital plus reserves, it shall not exceed, that is CARO 2020 is not applicable when PUC plus reserves and surplus are less than or equal to 1 crore. If it exceeds 1 crore, then obviously CARO 2020 is applicable. So second condition is also required to be satisfied by a private company for non-applicability of CARO 2020. So point number 2 is also clear. Come to point number 3, where it doesn't have total borrowings exceeding rupees 1 crore from any bank or institution, at any point of time during the financial year, at any point of time. See, previous condition for PUC and reserves and surplus, it is talking about outstanding balance of the balance sheet data. But here in the point number 3, so they are talking about borrowings at any point of time during the financial year from any bank or finance institution. That borrowing shall not exceed, that is less than or equal to 1 crore rupees again, less than or equal to 1 crore rupees again. Okay, it is considered at any point of time during the financial year. So third condition, borrowings less than or equal to 1 crore. If it is also satisfied, then no applicability of CARO. Okay, point number 4, and last one, it is okay, turnover, in fact revenue, it is the total revenue called as turnover, and this turnover includes revenue from the discontinued operations also, and it shall not exceed, that is less than or equal to, okay, 10 crore rupees as per the financial statements, 10 crore rupees during the year as per the financial statements. If these 4 conditions are satisfied, then for a private company, CARO 2020 is not applicable. See, if 3 are satisfied but 1 is not satisfied, say for example first 3 are satisfied but turnover it is more than 10 crore rupees, obviously CARO 2020 is not applicable. And hence what I just need to conclude is, every point here it is noted, these 4 points shall be satisfied. If all 4 are satisfied, then CARO 2020 is not applicable for a private company. I guess you are all getting the point. Very, very clear. This is the first paragraph of CARO 2020. Okay, first paragraph. Okay, so let us now go to second paragraph. This is the first paragraph. Okay, see, so what is there here? See, banking company, insurance company, Section 8 company, 1-person company, small company, and private limited company subject to fulfillment of following conditions. What are the following conditions? First point, it is talking about private company shall not be the subsidiary or holding company of public company. This is point number 1. What is point number 2? It is PUC plus reserves and surplus, okay, shall be less than or equal to 1 crore. Borrowings from any bank or financial institution at any point of time during the financial year, it shall not exceed 1 crore. This is outstanding balance. This is at any point of time. And coming to last one, during the year, if the total turnover of the company, including the revenue from discontinued operations, if it is not exceeding 10 crore rupees, then CARO 2020 is not applicable. Okay, if all these 4 conditions are satisfied, CARO 2020 is not applicable for you. So if it is a private company, okay, done. There is a public company whose turnover is less than 10 crore rupees. For that company, CARO 2020 is applicable because it is a public company. Okay, done. With this, I just want to go to second paragraph. Here it is mentioned here. See, this is the second paragraph in fact. Okay, what second paragraph is showing? Okay, it says the auditor's report shall contain the matters which are specified in paragraph number 3 and 4. So para 2 says follow para 3 and 4. There are certain things which are there in para 3 and 4. Okay, those are required to be reported. Those are required to be reported in the auditor's report as an annexure. This is what it is saying. Okay, it is just a time pass paragraph in fact. Okay, see paragraph number 2, it talks about auditor's report shall include those matters which are there in paragraph number 3 and paragraph number 4. What is there in paragraph number 3 and 4? That is what we are required to see. Okay, see, every report made by the auditor under section 143. What is 143? 143 is nothing but rights and duties of the auditor. One of the duties of the auditor is duty to report. Okay, that is called as audit report, and that audit report shall contain an annexure. Okay, as per section number 143 subsection number 11, and in the paragraph number 2 of that order, okay, it says matters to be reported which are there in paragraph number 3 and paragraph number 4. Okay, so it is just a time pass paragraph. See, we just need to see paragraph number 3 and 4. For that purpose, for that matter, we just need to see paragraph number 3 and paragraph number 4. Okay, so in paragraph number 3, there are 21 clauses. There are 21 clauses on which the auditor shall report additionally. 21 clauses which are there. In that, I will highlight few paragraphs where those are called as important clauses that you need to remember before you go to the examination. Okay, all the 21 are important, but you need to give highest priority to some of the areas where I highlight. Okay, around 7 to 8 areas I will highlight, and that you need to remember. Okay, done. Next one. So let us go to paragraph number 3. Or we'll do one thing. Let me go to paragraph number 4. Okay, then we'll come back to paragraph number 3. See, paragraph number 3 says. There are 21 points, right? There are 21 points. In those 21 points, the auditor needs to report. Say for example, first one, if the fixed assets of the entity, whether the fixed assets of the entity are properly verified or not, physically verified or not. This is what the first requirement under paragraph number 3. So imagine. So if it is yes, there is no problem. If it is no, if there are any discrepancies which are identified, so something which is there in paragraph number 3, if the auditor is going to qualify the same, okay, if the auditor is going to report in a negative way, if he is concluding it as no, then as per paragraph number 4, he needs to give the basis for that negative conclusion. So he needs to specify the reasons for the same, the basis for the same, that is there in paragraph number 4. So paragraph number 4 is okay. So it is not a standalone paragraph. It depends upon the conclusions what an auditor makes, okay, while he is reporting under paragraph number 3. So when the auditor is reporting something negative as per paragraph number 3 in those 21 points, okay, then what is the basis for that conclusion, why he has come to that particular conclusion which is negative way or which is qualified way, that shall be reported in paragraph number 4. Okay, let me go to paragraph number 4 once, okay, and then we'll come back to paragraph number 3. See, this is paragraph number 3, starting from clause number 1. From clause number 1, see, 21 clauses are over, and there are some beautiful questions are also given in the institute material. Okay, I just suggest you to read those questions before you go to the examination, because as this is the first time, there may be a question directly, it may come from the institute material itself. So don't take a chance of that. Okay, you just need to read everything which is given in the institute material. Okay, now come to paragraph number 4. What paragraph number 4 is saying? Okay, there must be some reasons if the auditor is giving unfavorable or qualified answers. See, where in the auditor's report, the answer to any of the questions referred to in paragraph number 3. There are 21 clauses, and out of the 21 clauses, if the auditor is going to give any negative comments, okay, unfavorable or qualified reports, okay, conclusions, then auditor report shall also state the basis for such unfavorable or qualified answers as the case may be. Okay, where the auditor is unable to express the opinion, sometimes, okay, whether it is right or wrong, he may not be able to conclude. Okay, this is called unable to express any opinion. Then his report shall indicate such fact together with the reasons as to why it is not possible for him to give the opinion on the same. So there are 2 points to be remembered in paragraph number 4. What is paragraph number 4 saying? Okay, if paragraph number 3, okay, there are 21 clauses. If in these clauses the auditor is giving unfavorable or qualified report, okay, unfavorable or qualified comments, then specify the reasons, okay, because he is specifying something which is negative and he needs to have the basis for the same. This is first one. Okay, coming to second one, if the auditor is unable to decide whether it is right or wrong, whether these 21 clauses, okay, he is unable to conclude, okay, whether it is favorable or unfavorable, he is unable to conclude, then he needs to write the reasons why he has come to that particular opinion. See, he must state the fact together with the reasons as to why it is not possible for him to give the opinion on the same, why he is not able to conclude, okay, whether it is unfavorable or favorable. Okay, this is what it is there in paragraph number 4. Paragraph number 4. Say, imagine there is one clause which asks the auditor to check, okay, let me take some beautiful example. Inventories, okay. Inventories have to be physically verified. That is what to be reported in clause number 2 of 21. Okay, so whether it is verified or not, if verified, is there any discrepancies identified or not? If discrepancies are identified, whether it is properly dealt in the books of accounts or not. This is what it is there in paragraph number 2, like clause number 2. Okay, if the materials are not physically verified, this is the negative comment what auditor is, okay, going to give in his report, then he needs to write the basis for the same. If he is unable to verify, okay, if he is unable to conclude, then he must give the reasons for the same also. That is there in paragraph number 4. Let me go to paragraph number 3 now. We'll have some beautiful discussion. I'll try to keep it as simple as possible. I'll try to complete this 21 clauses as soon as possible. Okay, I don't want to extend beyond 3.5 hours. Previously it was 2016. I took 4.5 hours to complete. So extensive discussion I have made. Okay, because in that I covered the verification procedures also, but here it is for the first time. Okay, in the material it is not even given the verification procedures also. Okay, whatever it is given in the study material, I am going to cover. So it is not going to take 4.5 hours this time. Okay, I am going to complete this 21 clauses within, okay, very less time, which may be useful for you before going to the examination. However, detailed I will discuss. Okay, in detail I will discuss, and I will give you the beautiful notes also. Okay, done. Come to paragraph number 1. Paragraph number 1 talks about, okay, it talks about fixed assets. So let us maintain a notes for that. See, I am now talking about what? Paragraph number, like clause number 1. Clause number 1, it is talking about fixed assets. It is one of the biggest clauses. Okay, there are 3 or 4 big clauses in this 21. Out of that, first clause is also very big. Okay, it contains almost 5 sub clauses. So I'm now going to talk about fixed assets. Either it can be tangible or intangible. For regarding that, I need to just talk. So there are how many clauses? There are 5 clauses starting from A, B, C, D, E. So A clause, what it is saying? Clause number A. It is divided into 2 parts. Whether the company is maintaining proper records showing full particulars, including quantitative details and situation of the property, plant and equipment. Okay, when it is property, plant and equipment, it is talking about what? Tangible assets. The similar type of clause is there again. See, whether the company is maintaining proper records. Again, it is talking about proper records showing full particulars of the intangible assets. But then what is missing here? It is not talking about quantitative details, and it is not talking about situation of the asset, where it is actually located. This is not discussed in clause number B. Okay. Now let us write some notes for clause number A. It is divided into two parts. It is talking about proper records for the fixed assets. Records for the fixed assets showing full particulars. So whatever it is to be maintained, it must be maintained. So it must be maintained in full. Okay, what is the cost of the asset? Everything. Okay, cost of the asset, when it is purchased, when it is sold, everything. Fixed asset register in fact. That is called as proper record. Okay, proper record showing full particulars, and it is divided into two parts. Part number 1, it is tangible asset. Part number 2, it is intangible asset. So if it is tangible asset, we need to give the quantitative details. We need to give quantitative details. Okay, and you need to verify whether quantitative details are there, and situation of the asset also. This proper records shall show the quantitative details and situation details also. What is called a situation detail? Situation detail is nothing but where the asset is actually located. So that is what we need to give. This is clause number A. There are 5 in fact. See, subclause A. So this is clause number 1. Out of clause number 1, there are 5 subclauses. Out of 5, this is clause number A. A, B, C, D, E. So this is point number 1. Now come to point number 2. I am going to give you some beautiful notes along with the class itself. Okay, you just need to copy the same. Before going to the examination, you just need to read that itself. Okay, done. Come to clause number B. This is the second subclause of clause number 1. Okay, whether those property, plant and equipment, so these are tangibles. Okay, see, it is not talking about intangible, they are talking about property, plant and equipment. Okay, PPE, whether this PPE have been physically verified by the management at reasonable intervals. Okay, yes, verified or not. Next one, whether any material discrepancies were noticed on such verification. Okay, if there are any discrepancies are there, see, physical assets are not matching with the books of accounts, then if so, whether the same have been dealt with in the books of accounts or not. Okay, what did the management do to deal with this discrepancies in the books of accounts? That is what we need to verify, whether the same have been properly, these discrepancies have been properly dealt with in the books of accounts or not, has to be reported under clause B. Let me write clause B also here. What clause B is talking about? It is talking about PPE. Okay, PPE, whether physically verified or not. Okay, physically verified or not. Who shall verify? By management. It shall be verified by management. That clause is not yet over. That management shall verify at reasonable intervals. Now, as an auditor, you need to report whether PPE is physically verified or not by the management at reasonable intervals or not. That is what you need to verify. Okay, report. That is what, as an auditor, you need to report. Okay, and along with that, if there are any material discrepancies, there are any material discrepancies. Okay, if noticed, okay, then auditor shall report whether such discrepancies are properly dealt in the books of accounts. Okay, so I guess you are all getting the point. This is clause number B. PP physically verified by the management at reasonable intervals or not, and if the material discrepancies are identified, then those discrepancies are properly dealt with the books of accounts or not. Okay, this is clause number 2. Come to clause number C. Subclause, all these are subclauses in fact. Okay, subclause C. See, it talks about title deeds. It talks about title deeds. Okay, so clause number 1 talks about proper record. Clause number 2 talks about physical verification. Clause number, okay, C, subclause number C talks about title deeds of the immovable properties. Title deeds of immovable properties. See, here they are not talking about PPE, they are talking about what? Immovable property only. So in PPE there may be movable, immovable, and here this clause is talking about immovable properties only. Immovable properties only. Okay. Now you tell me one thing. Okay. After a company is registered, it will get its characteristics. There are some characteristics where we learned in IPCC itself. Okay. There what we learned. Okay. Characteristics of the company. It is an artificial person. Okay. Limited liability. Company can be sued by someone. Okay, in a similar way, company can hold assets in its own name. This is one of the characteristics of the company. Okay, because the company is having the separate legal existence, company can hold the assets in its own name. Okay, now whenever the company is going to purchase any asset, it shall be in the name of whom? It shall be in the name of the company itself. It shall not be in the name of the directors, or it shall not be name of the promoters. In the name of promoters, it shall be in the name of the company itself. So now in this clause you are you are going to report something called as whether the title deeds of any immovable property, say imagine land or building, the title deeds are in the name of company or not. Okay, if it is not there in the name of the companies, then give the details in whose name it is there. That is clause number C. I guess you are all getting the point clear. See, title deeds of immovable properties disclosed in the financial statements are held in the name of the company if not provide the details thereof in the format below. Okay, now there is one point which is given in the brackets, that is, when I talk about immovable property, I am not talking about those properties which the company is accounting for by way of lease. There is a case where lessor and lessee both are there, and this lessee is the company, and for accounting purpose they are treating that leased asset in their books of accounts as their own asset. For that, this is not applicable. Okay, for the leased asset where the company is the lessee, if it is there in the balance sheet, then this subclause number C is not applicable. Okay, and it is only applicable when there are immovable properties, which are other than leased assets. Okay, and those immovable properties are there in the disclosed in the financial statements. Okay, and whether they are in the name of the company or not. If they are in the name of the promoters or anyone else, then that needs to be reported. So how to report? See, description of the property, which property is it, and gross carrying value, and it is held in whose name. Okay, held in the name of whom, whether promoter or director or the relative or employee. Period held, reason for not being held in the name of the company, if there is any specific reason, and and that dispute, that reason shall be disclosed here. So if there is any reason for not holding the asset in the name of the company and it is held by someone else, in the name of someone else, then that reason shall be indicated in the table. Okay, I am not going to give you this table in the notes, but however we can form a notes for this in clause number C. What is there in clause number C? Clause number C talks about what? Title deeds. That too in case of what? Immovable properties only. I am talking about immovable properties. Okay. Now this immovable property title deed shall be in the name of. Okay. Whether are there in the name of. Okay. In the name of. It is not shall. Okay. In the name of. Company. Immovable properties which are there in the financial statements are in the name of the company. If not, give the details. If not, give the details. I guess subclause number C is also fine for you. Come to subclause number D. What is subclause number D? See, these are the things we need to remember. See, subclause number D. Okay, subclause number D. Whether the company, see, every year company, there may be a case where plant, property, equipment or the intangible assets may be revalued. Okay, if in the year in which we are going to report, in that year if the plant, property, equipment or intangible assets, if those are revalued, whether it is revalued or not, if it is revalued, then whether it is revalued by the registered value or not, okay, and if there is any change which is more than 10%, which is more than 10%, the revalued figure is more than 10% of the existing, okay, then we need to report the amount of change also, how much it is changed, that shall also be reported here. Okay, now let us read slowly. Whether the company has revalued its PPE or intangible assets or both during the year. So this is point number 1. You need to write whether revaluation is been taken place or not, and if so, if the revaluation has been taken place, then whether the revaluation is done by registered value or not. This is point number 2. And also specify the amount of change, how much it is changed. Specify the amount of changed, whether it is increased or decreased. The change you need to write. Okay, the amount of change you need to write only if it is 10% or more in the aggregate of net carrying value, of each class of property. This 10% shall be calculated for each class of property, plant and equipment. Say buildings, it is one class, machinery, it is one class. For each class I need to verify whether the revaluation is been either upwards or downwards. If it is more than 10%, if it is exceeding 10% or more, then the amount of change shall be reported for each class of plant, property and equipment and or intangible assets. This is clause number D, which is very, very important as it is new. Okay, let me write clause number D also in detail. So what clause number D says? Okay, whether revaluation taken place or not, okay, if yes, revaluation shall be done by whom? If yes, revaluation is made by registered valuer or not, and this revaluation I am talking about what? Either it can be PPE, tangible asset, or it can be intangible also. It can be intangible asset also. This revaluation, this clause is applicable for PPE and intangible asset. And if yes, revaluation is made by, is it made by registered valuer? Okay, and specify amount of change, the amount it is changed. Okay, either it is increase or there is a decrease. Okay, specify the amount if change is 10% or more. Change is 10% or more. Okay, that amount shall be noted for each class. For each class of PPE or intangible asset. During the year. Okay, I guess it all happens. That revaluation shall be happen during the year, right? Okay, this is clause number D. I guess you are all getting the point clear. Okay, now come to clause number E. Beautiful notes I am drafting here. Okay, when I was discussing this particular paragraphs, okay, I am drafting some beautiful notes. Before you going to the examination, you just need to write this notes itself. Okay, read this notes itself. Come to point number E. Okay, it is also a new clause. It talks about benami property. What is benami property? Someone else's property is held by the company. Okay, there is an asset where the beneficial owner of that asset is someone, but the company is holding that as a benami. Okay, this is called benami transaction. If it is actually prohibited. If it is not the asset of the company, then it shall not hold it. Okay, if it is held by the company in its name, the asset which belongs to someone, okay, and it is covered under Benami Property Act, Benami Transactions Prohibition Act 1988, or rules made thereunder, and if any proceeding have been initiated or pending against the company, initiated or pending against the company as per the Benami Transactions Prohibition Act 1988, okay, and if so, whether the company, and if so, whether the company has appropriately disclosed the details in the financial statements or not. So now what we need to remember here, whether any proceedings have been initiated, okay, initiated or pending against the company for holding any beneficial property under Benami Transactions Prohibition Act 1988, and if yes, then whether it is properly, okay, disclosed in the financial statements or not. What is to be disclosed? Okay, these initiated proceedings shall be disclosed. Okay, now let me write here clause number E. Clause number E talks about Benami transactions. Benami transactions. Okay, if there is any proceeding, initiated or what? Initiated or already in pending. Already it is pending. Against whom? Against company. Against company. For what? Okay, for holding Benami property. What is Benami property? Okay, someone else's property is held by the company. Benami property which is covered under Benami Prohibition Act. Okay, Benami, that Prohibition Act is there, right? 1988. Okay, if it is covered under it, then if yes, whether those proceeding details, whether details have been, details are disclosed in the financial statements or not, with this we are done with the first clause, biggest clause. Okay, let us now focus more on this, because this, out of 7 clauses which I am going to highlight, this is one of the clauses of, okay, one of 7 clauses in fact. This is the important clause where there may be an exam question from this area. So whether it can be Benami transaction or anything. Okay, so that is the reason why I am going in detail. All the 6 clauses are given to you now. All the 6 clauses, all the 5 clauses, sub clauses are given to you now. So with this I am done with 1 clause, 5 sub clauses. Okay, that is talking about mostly talking about fixed assets. So let us highlight these notes. Okay, see, it is talking about proper records. It is talking about fixed assets, proper records. Come to point number 2. It talks about whether the physically verified or not, whether the assets are physically verified or not. Okay, and then material discrepancies, whether properly dealt with or not. Next one talks about title deeds. Okay, subclause D, it talks about revaluation. And last one, subclause number E, it talks about Benami transactions. These are the 5 areas you need to remember. Okay, let us now go to, okay, clause number 2. Out of 21 we are into clause number 2. In detail we are going. Okay, clause number 2, it is so simple. It is not as big as clause number 1. Clause number 2 is so simple. Okay, so done. Whether physical verification of the inventory. So this clause is talking about what? Inventory. Whether physical verification of inventory has been conducted at reasonable intervals by the management, and whether, in the opinion of the auditor, the coverage and procedure of such verification. This is the important point, the coverage. Okay, there may be many materials, right, many inventories. Okay, how many they have covered? Okay, how many of the materials they covered for physical verification, and process for that physical verification shall also be verified, shall also be reported. See, the coverage and procedure what they follow for such verification. Okay, whether it is appropriate or not, suitable or not. There are 100 types of materials which are there in the inventory, and management has verified only 1 or 2. It is not appropriate, right? Okay, then the coverage is appropriate or not, the procedure what they follow is appropriate or not. That is what the auditor needs to report in this clause. Okay, so, and whether any discrepancies of, okay, 10% or more. So which discrepancy is this? Okay, when there is some physical verification that has been taken place by the management, so that physical verification results must match with the books of accounts, must match with these financial statement figures. Okay, so if it is not matching, if there are any discrepancies, and if that discrepancy is is 10% or more, is 10% or more, the difference between these two is 10% or more, then the third thing is now applicable. See, or more in aggregate of each class of inventory, for each class of inventory were noticed, and if so, whether they have been properly dealt with in the books of accounts or not. See, here they are talking about 10%, which is the discrepancy happened between what? Physical verification and the financial statements. If it is 10% or more, okay, then only you need to check, okay, whether they have been properly dealt with in the books of accounts or not. This leverage, this benefit is there, okay, this advantage is there up to 10%. If it is more than 10%, then only report whether it is properly dealt by the books of accounts or not. I guess you are all getting the point clear. Okay. See, but however, in previously discussed fixed assets, this 10% is not there for the discrepancies. The 10% is there for revaluation. But here he is talking about the discrepancy between. See, there may be inventories as they are small in size and small in value. There may be a case, there can be some discrepancies up to 10%, it is manageable, but if it is more than 10%, go and report. Go and report whether it is properly dealt with in the books of accounts or not in the CARO. Okay, clause number 2, subclause number A. So this is what I am trying to highlight in this area. Okay, previously we discussed one thing, that is 10%. That is 10%. See here also there is 10%. This is applicable for what? This is applicable for revaluation. But here this 10% is applicable for physical verification, where previously the physical verification point, subclause number 2, see, physical verification, this 10% is not there here. Even it can be 1%, you need to write, you need to go and check whether it is properly dealt with the books of accounts or not. So this is what you need to identify. Okay, I guess you are all getting the point clear. Okay, let me go to, okay, let me go here. See, let us form the notes also for this. Important, very important. Okay, clause 2, subclause A. What subclause A is talking about? Subclause A is talking about whether the inventory is physically verified by whom? By management at reasonable intervals or not. Okay, this is what we need to remember, we need to report, and then okay, and then if it is physically verified, whether the coverage and procedure for such verification, okay, coverage and procedure for such verification is what? Coverage and procedure is appropriate or not, that you need to report. Appropriate. Beautiful. Come to point number 3. Okay, if there are any discrepancies which are identified, discrepancies, 10% or more, if the discrepancies are 10% or more, then go and check whether properly dealt with in books of accounts or not. These 3 we need to report under subclause number A of clause number 2. This is subclause number A, clause number 2. Come to B. This is an important point. Which is newly added. Okay, it talks about during any point of time for that for that company. Okay, during any point of time of a particular year. Okay, if that company has been sanctioned working capital limits in excess of 5 crores by any bank or finance institution in an aggregate. Say one company gave 1 crore, finance institution has given 2 crores. Okay, in an aggregate it crossed how much? It crossed 5 crore rupees, for which they have provided the working capital based on the security called current assets. Okay, we are going to take the loan on inventory, then inventory shall be kept as security. Okay, in such a way, if the company is allotted with the drawing power or working capital limits of 5 crores at any point of time during the financial year, at any point of time, okay, then that must be reported. See, whether during any point of time of a year the company has been sanctioned the working capital limits by in an aggregate from any bank or finance institution on the basis of security of current assets, okay, with this it is over. So you need to report whether, okay, sanction limit has crossed 5 crores or not from the banks or not. Okay, that is what you need to report. And as a continuation you need to write another thing. See, when you take any loan from a bank, so generally those banks need the quarterly returns from from where, okay, the properly returns from the borrower, from the company. So how they are going to utilize how they utilized the money which is being provided by the banks, that is what they need to show in the inventory. Just a minute. Sorry for the disturbance. So there was some disturbance for me from outside. I just had to go there. We can now continue with this. Okay, done. We can now continue. where are we? Yeah. So till here I completed. Now, when the banks take loan from when the company takes loan from a bank, okay, bank needs the company to show the quarterly returns, how they have utilized the money. Okay, the details of the stock, etc. we need to give. That is what it is called as stock audits. What we do regularly, generally we listen to the word called stock audits. So some chartered accountants or from the side of CA firms, someone will go and verify the stock and they'll give the report to the bank, etc. Okay, those quarterly returns, are they filed or not? If they are filed, whether they match with the financial statements or not. Okay, that is, the quarterly returns are matching with the financial statements or not, that is books of accounts or not. That is what we need to report. Okay, I guess you are all getting the point. Whether the quarterly returns or statements filed by the company with such banks or financial institutions are in agreement with the books of accounts of the company. If not, give details. Okay, whether they are in agreement with the books of accounts of company. If not, give details. Okay, done. Okay, this is clause number B. Let us write clause number B notes also. See, whether the proper quarterly returns. See here. So what is written here? Whether the quarterly returns or statements filed by the company with such banks, okay, with such banks or financial institutions are in agreement. This is what we need to report. Quarterly returns are in agreement with books of accounts. So quarterly returns filed by whom? Quarterly returns filed by whom? Company to banks or financial institutions are in agreement with what? Books of accounts. That is what you need to report. See, these are the reporting requirements under clause number 2 in relation to inventories. So let me highlight few things here. Okay, first point, it is physically verified. Coverage. See, it is coverage and procedure. And third point, it is discrepancy, and another, it is quarterly return. These things we need to remember when you read clause number 2. So let us go to clause number 3 also. It is also the biggest. This is actually, it is the biggest of all 21. Okay, in this session I'll try to give as much as possible all the details of clause number 3. Okay, after clause number 3, let us take some small break and then we'll get back and we'll complete 4 to 10. Yes, done. So this is clause number 3 now. Clause number 3. Let us go to clause number 3. Okay, clause number 3. It is the biggest clause. It contains almost subclauses of 6, I guess. A, B, C, D, E, F till F. All the subclauses you need to write in detail. Okay, done. See. So slowly we'll read, we'll bifurcate each and every word, we'll investigate each and every word, okay, and I'll try to separate all the things and give you the full picture of clause number 3. Okay, done. Whether during the year the company has made investments. See, here it is talking about the investment which are made by the company. Okay, the outflows of the company they are talking about. The investments which are not made in the company, it is talking about the investment which is made by the company. It is talking about outflow of the funds. Okay, done. So investment which are made by the company, okay, comma, provided any guarantee or security or granted any loans or advances in the nature of loans. Secured or unsecured. So they are talking about what? They are talking about investments, okay, guarantee, security, loans. They are talking about investments, guarantee, security, loans, and these loans may be secured or unsecured. Okay, so if these are made to any companies, firms, limited liability partnership or any other parties. So if these are made to anyone, either it can be company, firm, limited liability partnership or any other parties. Okay, then if these are there, then clause number 3 is applicable. If so, during the year if this happens. If so, okay, whether during the year the company has provided the loan or provided advance in the nature of loans or stood guarantee, okay, or provided security to any other entity, okay, to any other entity. If so, indicate the following. See, they are talking about in this clause. So overall this clause is applicable investment, okay, guarantee, security, loan. However, subclause number A is talking about what? It is talking about loan, it is talking about guarantee, it is talking about security. See, so subclause number A, it is particularly talking about loan or security or guarantee to any entity, then you need to report something, and this subclause A, it is not applicable for those companies whose principal business is giving loans. So generally, okay, which business will have this principal business of giving loans? Either it can be banks or it can be NBFCs normally, okay. So for banking company anyway, CARO 2020 is not applicable, but however for NBFC it is applicable. But there is another clause for NBFC, it is not to be covered here. There is another clause for NBFC which is not to be covered here. So this particular clause is not applicable for NBFC, okay. However, CARO 2020 is applicable. See, there is another clause. Let us go. Let me scroll down few clauses. Come to 7, 8, 9, okay, 10, 11, 13, yes, 16, clause number 16. See, whether a company is required to be registered under section number 45 IA of Reserve Bank of India. This is called NBFC, in fact, this is called NBFC, okay. For this there is separate clause. This clause is applicable for NBFC. So now clause number 3, it is talking about what? For normal companies other than banking company and NBFC, because see here, subclause A, it is talking about only those companies to whose other than whose principal business is giving loans. So BC, NBFC are not covered here, okay. Now subclause A, what it is trying to say? So in an aggregate, what is the main heading of clause number 3? Okay, it can be investment, okay, guarantee, security, loan. In an aggregate, it is talking about 4 things. However, subclause number A, it is talking about loan, security, guarantee, okay, to any person. Then you need to report the amount. Okay, and that amount to 2 things. Okay, the aggregate amount during the year and the balance outstanding at the balance sheet date. 2 amounts you need to write. Aggregate amount during the year, how much you have taken, how much the company has given, and along with that the closing balance also you need to write, because the amount you have given and the closing balance may change, may be different, because the amount you have given is the amount of outflow. However, closing balance is something different, which may, okay, there may be repayments also that you need to reduce and keep the outstanding balance. Okay, I guess you're all getting the point. Okay, of such loans and advances and guarantees and securities to subsidiaries, joint ventures and associates. So let me now write some detailed notes for the same. Okay, this clause in an aggregate, it is talking about investments, okay, or guarantee, security, loan, and this loan may be secured or unsecured. Okay, secured or unsecured. And these are given to whom? Okay, any person, and in this person there may be subsidiary company, joint venture, associate company, anything may be there, any person. It can be limited liability partnership, it can be another company, Okay, it can be any body corporate. Okay, now this is the main heading of this clause. Now there are 6 subclauses. Out of that, clause number A I am talking about. Okay, done. In this they are talking about loan, guarantee, security. Okay, for these things they are talking about. Okay, if these are there, then go and specify amount. Go and specify the amount. Which amount? 2 amounts. Okay, during the year, aggregate of the loans given, securities given, guarantee given, aggregate during the year, aggregate, and closing balance in balance sheet. What is the difference between these two? This is the aggregate balance and this is the closing balance. Okay, so aggregate minus repayments gives you the closing balance. These two you need to write. See, that's what it is given. The aggregate amount during the year, okay, and balance outstanding on the balance sheet date with respect to such loans, okay, securities or guarantees, okay, and specify these amounts which are given to, okay, and these loans shall be given to whom? Write it separately. Okay, this amount write it separately for subsidiary, joint venture or associates, okay, other than subsidiary, joint venture, associates. So if the loans, securities or guarantees are given, then specify the amount. Okay, which amount needs to be specified? During the year, how much is it made, and closing balance, and these amounts shall be separately shown for subsidiary, joint venture and associate, and other than subsidiary, joint venture and associate. Okay, with this, clause number A is over out of 6. Clause number A. Okay, now let us go to subclause B. See, other than subsidiary, joint venture and associates. Okay, subclause B. Whether the investments made, guarantees provided, securities given. Okay, see, again they are talking about, this time they are talking about investments, guarantees, securities. Okay, and the terms and conditions of grant of all loans and advances in the nature of loans and guarantees provided are not prejudicial to the company's interest. They are talking about all the things. They are talking about investment, guarantee, security, okay, and loans. Okay, whether the terms and conditions are prejudicial to the company's interest or not. Okay, that is what we need to write. If it is not prejudicial, then there is no point. Okay, you can just go and write it is not against the interest of the company. The auditor needs to write. Okay, if it is prejudicial to the interest of the company, then he needs to write. Okay, see, whether it is right or wrong, he needs to specify here. See, whether the investments made, guarantees provided, securities given, and the terms and conditions of all, okay, loans and advances in the nature of loans and guarantees provided are not prejudicial to the company's interest. So let me write point number B also. Subclause B. It is talking about investment, guarantee, security, loan. Okay. Terms and conditions. Prejudicial to the interest. Interests of company. This is clause number 2. Whether it is prejudicial to the company or not. If it is yes, go and write yes. If it is no, go and write no. If it is yes, go and specify the reasons for the same. Okay, under paragraph number 4 also of this CARO 2020 order. Okay, done. See, In respect of loans and advances, see here they are talking about loans and advances. They are not talking about investment guarantee security. Loans and advances, okay, in the nature of loans. Whether the schedule for repayment of principal and payment of interest has been stipulated, whether the schedule is there or not, okay, and whether the repayment or receipts are regular. Okay, these two things. So point number 3, C, subclause C. It is talking about what? It is talking about only loans. If there are loans, whether, okay, loans, then principal and interest. Loans with the principal and interest. Whether repayment schedule is stipulated. What is stipulated? It is there or not? Stipulated. And whether receipt, because these are the loans given by the company and the company has to receive the repayment. Okay, whether the receipts or repayments are regular. So on time, whether the company is receiving or not. On time, the borrowers are paying the money to the company or not. That is what you are going to, okay, write there. Come to point number D, subclause number D. Here they are talking about overdues. Okay, here we need to see, okay, repayment schedule. As per the repayment schedule, you will come to know the due date. Okay, if the other person, if the borrower is not paying to the company on time, then come to clause number D, subclause number D. See, what is subclause number D? If the amount is overdue, this is what? If the amount is overdue, state the amount overdue for more than 90 days. State the amount overdue, okay, amount overdue for more than 90 days. So from where? This 90 days shall be counted from due date. How come you know this due date? From the schedule. From the schedule you will come to know the due date. Okay, and whether reasonable steps have been taken by the company for recovery of the principal and interest. So simple points. So subclause number D. So it is talking about what? Subclause number D. Okay, it is also talking about what? If the amount is due, loan amount is due. It is talking about overdue for a period, period 90 days, more than 90 days, overdue period for more than 90 days, okay, then write the amount, specify the amount which is overdue, specify the amount. Along with that, whether reasonable steps have been taken. Okay, steps have been taken to recover the money, to recover principal plus interest. You can write it as principal plus interest. This is clause number D. Come to clause number E, easy only. Clause number E. Whether any loan or advance in the nature of loan granted. Oh, very, very important. Clause number E, F. These two are very, very important. Okay, done. Now, there may be a question from this area only. Okay, clause number E. Whether any loan or advance, again they are talking about loan or advance, okay, which has fallen due during this year. Company has given the loan and the due date is fallen during the year, but it is not been recovered. Okay, it is not been recovered. The borrower has not paid the money to the company, but the company, okay, what it has done, okay, the company has been, the loan has been renewed or the loan has been extended, and a fresh loan has been given by the company to the same borrower to repay the existing loan. Fresh loan is given to repay the existing loan to the same party. If this happens, okay, to settle the overdues of the existing loan, if this happens, if so, specify the aggregate amount of such dues, renewed, extended or fresh loans which are given. Okay, specify the aggregate amount and percentage of the aggregate, such aggregate, okay, percentage of such renewed, extended or fresh loans to the total loans. during the year, to the total loans during the year. This is clause number E, very, very important. Clause number E, very, very important. See here, okay. Loan due date in the year. Loan due date in the year. Company has not recovered the money. However, what company has done in the year? Loan due date fallen in the year. Fallen in the year. What company has done? Okay, company has done what? Three things. Either it is renewed. Loan has been renewed. It has been extended. It has been extended. Or a fresh loan has been given by the company. Fresh loan has been given by the company to the existing borrower. Why this loan has been given? To repay the existing loan. To repay existing loan. Okay, if this happens, then specify the amount. Which amount? The specify the amount which is given for the specify the amount, okay, of loan. The specify the amount of loan which is renewed, extended or fresh loan. Okay, and also specify percentage of this renewal. The percentage of loan which has been renewed, extended or fresh loan is given. Okay, percentage of this out of total loans. Out of total loans. Percentage of renewal, extension or fresh loans out of total loans. Out of total loans. See, granted during the out of total loans granted during the year. Percentage of aggregate to the total loans granted during the year. Okay, total loans granted during the year. So this has to be specified. This has to be specified. See, clause number E. Loan due date has fallen in this year, but what company has done? Company has renewed the loan or extended the loan period, or fresh loan has been given to the existing borrower to repay the existing loan. If this happens, specify the amount of loan which is renewed, extended or fresh loan which is given. Okay, and also along with that, specify the percentage of this REFL of this is the percentage of what? Of total loans which are granted during the year. This is clause number E. Subclause number E. What is subclause number F? What is subclause number F? And believe me here, okay, this clause number E, at last they have written one thing. This is not applicable for the companies whose principal business is to give loans. Okay, this clause is also not applicable for those companies whose principal business is to give loans. Okay, and particularly for NBFC it is not applicable. Particularly for an NBFC it is not applicable. Anyway, banking company it is not applicable. For NBFC also it is not applicable because clearly it is mentioned, subclause number E, it is not applicable for those companies whose principal business is to give loans. Okay, done. Last point. See, for NBFC, whatever it is there in 16, it is applicable. And along with that, whatever it is there in, okay, clause number 3 is also applicable. 3 is also applicable. However, in clause number 3, subclause number A, subclause number E is not applicable. Okay, this is applicable, but these two are not applicable. Okay, for NBFC, clause number 16 applicable, clause number 3 applicable, but in clause number 3, subclause number A, E are not applicable because specifically it is mentioned here. This is the detailed way of learning. Each and every point we are investigating. Okay, done. Last point. Whether the company has granted any loan or advance. Here again they are talking about loans and advance only. No, guarantee, no security. They are not talking about security or guarantee. They are talking about only loans and advances in the nature of loans. Either repayable on demand or without specifying any terms. Okay, they have not specified any terms of repayment. But these loans are given to whom? Okay, they are given to promoters and related parties. Then you need to specify the aggregate amount, how much they have been given to. How much the loans have been given to promoters and related parties. Along with that, the percentage thereof which are given to the promoters and related parties of total loans granted. Okay, I guess you are getting the point. Let me write here. Okay, subclause number F is also talking about loans only. Loans only. This time the loans are given to whom? Promoters or related parties. Loans are given to promoters or related parties. Then specify amount of loan which is given, and also percentage of the loan which is given to promoters or related parties out of total loan. Percentage of loan given to whom? These persons out of total loans. Okay, out of total loans. However, see here, out of total loans. Okay, but here it is not mentioned that these total loans granted during the year or not. Previously it is what? See here, it is during the year, but here during the year point is not there. Again, this is clause number F. So you need to take the total amount of loan, and out of that, what is the total loan which is given to promoter and related parties? This is what you need to write. However, in clause number E, okay, the percentage of aggregate of loans, okay, aggregate of loans which are renewed, extended, and fresh loans are granted during the year, and the percentage shall be taken out of the total loans which are granted also during the year. See here, that is what it is there here in subclause number E. So with this, I am done with clause number 3 in detail. Clause number 3 in detail. Okay, I guess it is the right time to take some break. Okay, right time to take some break, and after break we will be continuing with clause number 4 till clause number 10 in this session. Okay, so the rest all are so simple. Okay, there are 3 or 4 big clauses. Out of that, 2 have been completed. Remaining everything we can go little faster. Quickly I can be able to complete this. Okay, done. Let us take some small break.